Hope you guys had a lovely holiday season and a great new year. I know it's a little late because I took a mini break, but hope your month of January was awesome. We're back today and let's take a look at my journey of investing during the last year. Hello and welcome back to my channel where we talk about investing, personal finance, and dividends. If you're new here, consider subscribing to my channel and smashing that like button if you enjoy this type of video. My investing journey started last year even though I had a TFSA account already with the bank. My dad helped me set up a TFSA account beforehand with the bank, but I always thought of it as a risky and glorified savings account. Savings account with the banks are set and you're guaranteed the interest amount, while TFSA with the banks have a slightly higher chance of returning you more money, but they're not guaranteed. I always thought of a TFSA account as a savings account, like many other people do as well. We're not taught on how to handle our finances in our education with the school or university. We're just meant to figure it all out on our own. I'm very grateful for YouTube's platform as it allows content creators like me to share financial education videos to a greater audience. I'm also very thankful to each and every one of you guys watching my videos, subscribing to my channel, liking my videos, and reaching out to me through comments and emails. Thank you very much. I started this channel as a way to document my progress and share any information that I find through researching. Some of which are important financial topics and some are just basic financial information that we all need to know. I'm very happy to see some of you guys have found that information very useful. I graduated in 2019 and as most graduates, you have a big student loan debt to pay back. I was lucky enough to get $2,000 scholarship entering university. But don't worry, I lost it the very first semester. I did not keep my grades up. That was the only free $2,000 that I ever received. So I knew I had a big student loan debt to pay back right after I graduate. So I was planning to focus all my money to repaying my student loan debt and then put all the extra money in a savings account, which usually returned around 1%. So I focused on paying my student loan debt so I could be debt free. When the market crashed in March, I wish I started then. But I did not have the extra money sitting around to start investing. I know at the time I was like, what? The market's crashing. Like, why would anyone in their right mind buy into the market right now? But that kind of sparked an interest in me to learn more about personal finance and educate myself on these topics. And educating ourselves in personal finances is kind of essential. It tells us what to do, what not to do, what we can afford, what we should plan for in the future. And these are never taught in school or university. So I was doing a bunch of research for myself and trying to get a better understanding on these topics. And I wanted to share this information with others like you guys in simple terms so we can all be educated. I started investing in August and I was able to aggressively save up $10,000 and invest it in my TFSA account. I think it was possible because we were all working from home and not going out much helped kind of save a little bit more than usual. My goal last year with investing was to save up $10,000 and I was able to achieve that goal. And I think we all need to start somewhere and set a milestone, set a goal, and try to achieve it one at a time. Yesterday was the best day to get started and today is the next best day. We just gotta put our money to work and let it do its thing.
Just do it!
Wishing you all a great year ahead. With new year comes new set of goals, new set of milestones. I think we should all have some sort of goal related to finances, whether it be save more money or pay off some debt or invest a certain amount of money or invest in real estate. Or simply having a goal to learn more about personal finances, which you guys are doing right now by watching this video. I keep a spreadsheet for tracking all my stuff. I keep track of how much dividends I receive every single month and the progress of my investments. And last year I made $50.38 total in just dividends, which is money paid out to me for holding certain stocks. And for dividends I received last month, on December 1st, CU Canadian Utilities paid me $1.31 for holding 3 shares, FTS Fortis paid me $1.01 for holding 2 shares, and EMB Enbridge paid me $1.62 for holding 2 shares. On December 7th, REI RioCan paid me $7.80 for holding 65 shares. On December 8th, VAB Vanguard's aggregate bond ETF paid me 22 cents for holding 2 shares. VRE Vanguard's REIT ETF paid me $1.01 for holding 11 shares, and VDY Vanguard's High Dividend Yield ETF paid me $1.25 for holding 8 shares. On December 15th, PZA Pizza Pizza paid me $1.38 for holding 25 shares. On December 21st, MFC Manulife paid me $1.40 for holding 5 shares. And on December 30th, CNR Canadian National Railway paid me 58 cents for holding 1 share. And finally, on December 31st, SLF Sun Life Financial paid me $1.10 for holding 23 shares. In addition to dividends, I've technically made more money because of capital gains, which means the stocks have increased in price since the time that I bought them. Dividends are paid out in intervals, but capital gains are not paid out unless you sell the stock. My portfolio last year approximately increased about 10%. I do not expect this kind of growth every single year, but knowing it will grow more than my money sitting in my bank account is pretty nice. If you have money sitting in your checking account more than your minimum balance, you're technically losing money because of inflation. And if you have money sitting in a savings account, you're making about 1%, which covers inflation rate, so you're not losing money. You should definitely have a savings account for an emergency fund, which covers 2 to 3 months of expenses, but you should not put all your money into your savings account. You should have some of your money in real estate, you should have some of your money in stocks, and you should be well diversified. Over the past 90 years, the S&P 500 returned on average 10%. Let's just take the worst case scenario, you make 4 to 5%. That is still 4 to 5% more than the money sitting in your checkings account, and 3 to 4% more than the money sitting in your savings account. That's been my investing journey through the year of 2020, and let's hope all of our investing journeys will be great during this year. As always, make your money work for you, not the other way around. You could check out WealthSimple Trade and start investing today. I have another video that walks you through the setup. I'll leave a referral link in the description box below. If you use that link, sign up, fund your account $100 and buy some stocks with that, you'll receive $10 and I'll receive $10 as well. Let's take personal finance into our own hands and make our money work for us. If you enjoyed this type of video, be sure to smash that like button and hit that subscribe button for more content like this. Bye!